I think that happens when we make new highs, and then the general financial media has to spend more than 2 minutes every 30 days talking about gold.
Today, we are fortunate to be joined by Peter Grandich from Peter Grandich and Company. We're going to talk about gold. We're going to talk about a few of the big stories that will impact the price of gold and silver in the coming months. Peter, welcome to Ron's Basement.
Ron, it is an absolute and most sincere pleasure is all mine.
Well, thank you. On behalf of all of our viewers who are with us right now, it's a real honor to have you. You've spent a few years in the markets, several decades, as a matter of fact, and you've spent a good part of that watching the mining sector and in particular the gold and silver sectors. Today, we're sitting with gold around 1950 per ounce. It doesn't feel like we're in striking distance of new all-time highs, but we are. Any thoughts, just general thoughts on the gold price, the silver price, and what's going on right now?
Sure, Ron. As we speak here this last day of May, uh, I find myself befuddled to be completely candid, which I believe I'm all the time, but to be absolutely certain everybody understands that. If you asked me 6 months ago, the metal prices would be at these levels. One, I would tell you there'd be a lot more enthusiasm, and two, the mining shares would be a whole lot higher than they are. So I would have been completely wrong on that, and am wrong because I would have been buying them, and I was 6 months ago. I think there's a few issues that's faced. First of all, this is always the most important one. Wall Street treats gold like kryptonite. It's just not brought into the family of assets that the typical mainstream, if you want to call it, I call them the don't worry, be happy crowd on Wall Street talk about, because it flies in the face of what they're making their living on, which is paper assets, stocks and bonds. To talk to somebody and say we think gold's going to go up a lot, for a lot of reasons you would give them, is a lot of reasons not to have stocks. So it loses that. It doesn't get caught up in the investment criteria of typical financial advisors. That's the first situation. The other problem is that it still is not viewed in the manner that it should be, and that is it's really an alternative to paper money, no matter which paper money you're looking at. And what we've noticed about paper money, no matter which one you're looking at, is gold is not an obligation of anybody else. It's not a liability of anybody else. And I think that's one of its most underutilized characteristics. I've told people for years, as I know you were blessed to honor by interviewing my partner and I in the planning group I'm involved in. And I've told people whenever we sit with them is own gold and hope it don't go up. And they all say the same thing, Ron. Why do you want me to buy something that's not going to go up? Because much of what you have here is likely to go down if gold goes up a lot. And so it's very peculiar. You have to also think, Ron, understand that while you and I live it each day, it's a very small segment of other markets. I mean, I've been in and around and was on the speaking tour. I'm actually going to go back after 10 years and talk at a couple of conferences. And not much has changed. Yeah, a few people got more gray like I did and lost hair. Others have passed on, and there's a few younger people replace it. But it's not a market that's been swept up by a new age, a group of people investing. Yet, the people who would know best are the biggest buyers, central banks. That is the untold story, or the story that's not being told in mainstream, which should be, because they have been accumulating it for a lot more reasons than you and I would normally would for a trade or investment. It's something much bigger. And we're just starting to see that unfold with the BRIC news and the weaponizing of the dollar and geopolitics, which most financial advisors don't incorporate into their thinking. So overall, yes, it's disappointing, Ron. I went a long way to describe that. Trust me, I weep at nights like you as well. But I know one day we're going to see that mask off, and I really think it comes in 12 months or less. So I think we're going to be okay, even though right now it doesn't give you the warm feeling that you would hope it would.
Yeah, and I know oftentimes they say that's the time that you should buy when it's the hardest to buy, and I have to keep reminding myself of that. What do you think about, I don't know if you heard, there was a recent Gallup poll that results that came out. was something surprising about gold. Americans rated gold as the second best long-term investment option. And that was, I think, 26% of people voted for gold. Safer, they said, than stocks, bonds. They did rate real estate higher, but the 26% was up from 15% in the prior year. I mean, we are the richest country in the world. And like you alluded to when you were speaking, very few of us own gold and silver. Do you think it's possible that we could see a new wave of people coming in to the market?
The upside to it is this. I'll argue. Some people say it's 2%. I don't think it is. I think less than a half of 1% of the average portfolio in America has gold, and I mean real gold, physical gold. I'm not talking about owning a mining share or something, because that's indirect. That's not real ownership. Real ownership is physical bullion, bullion in your hand or stored in a vault somewheres and all. And it's pleasantly surprising to hear that number. Maybe they took that poll at a gold show, because I would think I'm pleasantly surprised that there's that many people that would rate it that high. But believing it is and owning it is two different things. I still find almost no one with real any exposure to physical bullion, other than that confined little world that you and I hang our hat in.
Right. There's only so much room here in the basement. And I guess from an optimistic perspective, and I've heard other people, including Rick Rule, use that 0.5% figure. The pardon the pun, but the silver lining to that being so low is if we go from 0.5% to, let's say, 3%, that's like a six-fold increase just in the amount of money that could be coming into the sector.
Yeah, I think that happens when we make new highs, and then the general financial media has to spend more than 2 minutes every 30 days talking about gold. That's when I think we'll if that's going to happen, that's what's going to need to happen.
Yeah, that'll be interesting times. Would you share your thoughts with us on the recent debt limit that's been front page news here for a number of weeks? And it seems to me that the Democrats and the Republicans, one thing that they did agree upon is that we're just going to go further and further and further into debt. Any Peter Grandich thoughts on that situation?
Well, I've been, as we speak on the 31st of May, I've been really beating up McCarthy. I really think he caved in all sorts of ways. His initial speech after he went through that, I don't know how many votes before they finally got him in as House Speaker. His biggest single thing he said that day was, I will not allow 87,000 IRS agents to be hired. That's going to be killed as far as if I'm going to be Speaker. And he was correct, because the new bill only allows 82,250. And it's just one of many havens that I feel anyway has been done. It's a terrible thing to say, and a lot of people would suffer from it, Ron. But the best thing that could have ever happened, and it needed to happen back in 2008 crisis, is that we did default, or we had a huge debt crisis, because people have grown so accustomed to it. And again, like you said, it's just going higher. And that can one day, and we may live long enough to see it, Ron, unfortunately, but if not, our children or our grandchildren will. They're going to go kick that can by trying to raise debt again. The can's not going to move. And that's when it all comes down. And that can is really getting closer and closer to that point. I think they got one or two more kicks at it. They may get away for a couple more years. But then after that, especially now when the Congressional Budget Office says that we're going to $50 trillion in debt in less than 9 years, based on the projections of cost and all the things that we'll continue to pay and all. And it's coming to the point where it really doesn't matter who's president or what side of the aisle. These folks just think you solve the issue by printing more money, and that has an unhappy ending.
Yeah, and you're absolutely right. I mean, the money has to come from somewhere, and you can't just keep accruing more and more debt. I told my wife, I said, she was asking my thoughts on the matter, and I said, well, it would be like if we were buried in a mountain of debt, student loan debt, mortgage debt, car debt, everything else, and we had maxed out all of our credit cards. That's kind of the situation the United States as a whole finds itself in right now. And we just applied for one final credit card, and we just, received approval in the mail that we got another $4,000 in credit limit, and that we would celebrate that. It just doesn't make any sense. I mean, at some point, it doesn't work.
Well, Ron, I think something else that wasn't discussed since the pandemic was the United States has been almost as much as 70% of the buyer of its own debt since the pandemic. Japan has been 100% of theirs, and we know the fiscal nightmare they're facing with a whole lot of issues similar to what we have. And I think this weaponizing of the dollar, and that's one of the main reasons why we're seeing so many countries look to flee from the dollar and trade in an alternative way, and to move away from the pressures that the United States can inflict on them. And that's only going to serve to help that accelerate that situation. And so we could be looking at 12 months from now, and I'm not talking about a new currency that suddenly just totally replaces, but I can see many of these countries begin to de-emphasize the dollar, trade in their own currencies, and even form some bilateral group and maybe create an alternative currency just for that group. And all of those things, all of them, are no good for the dollar and the future of our debt crisis. And that only makes me more concerned than ever before. And this was the chance for someone to finally say, that's it. We're truly not going to raise it. If we have to default, we're going to default. And they caved. And listen, Democrats caved before, now Republicans are caved. And I really lost any hope that I had in the political system here in the United States when the Republicans had a chance here to finally make a stand and be real hard on it. And they weren't.
Yeah, it feels like to me, and you took the words out of my mouth, that we're heading down the same path as Japan, and that the only option eventually is going to be that the Fed has to print more money to subsidize the debt, and that will be dilutive to the U.S. dollar, and that will be good for the price of gold and silver. Is that
at a time, Ron, sorry to interrupt, at a time when more and more people are not using the dollar, not coming to the dollar, but moving away from the dollar, which will help accelerate it. This is, let me put it this way. I never sold ammo, dry food, cabins in the woods and all, but finally, sadly, the talk that's legitimate to speak of where the United States may be heading, the gloom and doom camp, or whatever you want to call them, really have realistic expectations now. It's a legitimate argument that could be made, not some pie in the sky that sells something. And it's terrible to say that. You and I, we've been around the block a little. We're not, just starting out in our lives. And it's sad. We come from a generation when my father would not even think of a credit card. And that generation used to ask itself, can we afford it? Now this generation says, can we make the first payment? And, there's a whole lot of issues in that regard. We just seen consumer debt just go over $1 trillion. I mean, it's just, and if I may just add one thing for me, so people fully understand where I'm coming from, I base a lot of my faith on my Christian faith and biblical, and in the Bible, whether you consider it as just an historical book or the Word of God, debt is frowned upon. It doesn't have one positive verse. So whoever the author was of that was spot on, because we're seeing the troubles now of what that leads to.
Yeah, I agree 100%. My viewers know I preach, get out of debt. No matter how you slice it or dice it, some people will argue, well, if you can, make an investment and do better, but in my opinion, I'd rather have no debt whatsoever and make investments from there. It's an easier way for me to sleep at night.
Ronnie, my slogan's been for my family, my friends, and those who want to listen, which is only like 2 out of 10 that we meet. Less is more. It really is. And there's and if I just may add, I know this wasn't where we're going today, but let me just add this. There's a mental freedom that comes from that until you've done it, you can't not believe it, what it is to no longer worry about how am I going to pay for something. It really is peace unlike you haven't been used to.
Yeah. The final thing I'd like to touch on, if you have just a few more minutes.
No, she'll go right ahead. I got all the time in the world for you, Ron.
Okay. Well, thank you. 2 weeks from today's May 31st, we're going to hear from the Fed regarding interest rate policy. I I just have this feeling that they aren't going to raise rates. I know the general consensus is that they are going to raise rates. Do you have any thoughts on what they're doing or what their thinking might be that you'd like to share with us?
You got a coin on that table so we can flip it?
I've
Because
got it right here. Coin
there
shop
you go.
Chris. Yeah,
There you
yeah.
go. Well, we might as well do that because that's how close it is. I mean, it
Okay.
can literally go either way. You can make a good argument. One could be is, hey, the markets aren't terribly bad. One more raise makes them look like they're still on guard doing it. Things are starting to simmer down a little. Yes, there also could be that pause, but anybody thinks that they're going to flip and suddenly just put gasoline back on the fire, I think that would be the mistake. But it's a coin flip, Ron. I would argue anything else is it's just going to be a lucky guess if you get the right side.
Okay. Sounds great. Anything I forgot to touch on today you'd like to mention, Peter?
Yeah, I like to mention because I know you're interested in individual mining shares as well
Yes.
and junior
Yes.
resource stocks. I like to touch on that because I plowed myself back into that area. I'm suffering losses for doing that. I know it's hard for people to imagine that financial advisors could actually lose money, but I've done it more than once.
Same here.
But there's an interesting change I think we have to be aware of. And, I've been around that metals and mining junior resource circuit for almost 40 years. And the number one biggest change is the way a mining company, especially an exploration company, marketed its wares in order to enhance shareholder value was through brokers or financial advisors throughout North America and the world, in fact. And here in North America, there were thousands 10 years ago, 15, 20 years ago, that had a book of business. A good part of it or all of it was buying junior resource stocks. And they had 300 or 400 clients. So when the company could market to one of those advisors and convince them they're worthy, they got their 200, 300, 400 clients and multiply that by how many? That's a dinosaur. There may be a handful left, but no one really has using a full service broker to buy individual brokerage stocks. It's just not a thing anymore. The second thing that impacted here, especially in the United States for companies that are listed in Canada, is the brokerage firms and the regulatory people made it basically impossible to buy any stocks. You really can't buy any stock here that is not listed down here. And most of the companies now want to be listed on the major NASDAQ or the New York, not even just with an OTC symbol. So that's another market that they lost to. Then the third thing I think that happened is I don't think the pie has ever gotten bigger. In other words, if we were 1% of the total investment pie, it's now half of 1% because half of that 1% went to things like cannabis stocks, cryptocurrencies, and some lost money forever. So they can't even switch back to juniors. So I will argue that the junior resource market in particular is far tougher now from a company standpoint than any other time in history. And that's reflected in the stock. And on top of all of that, we have a bad overall investment environment. We have people with a lot of concerns. And you're just not going to have all that going and somebody say, hey, yeah, while the world's coming to an end, buy me a junior resource stock. So it's very challenging. Doesn't mean it's not worth it. Shares that I see now, one in particular, my largest shareholding, and I normally don't mention it, it's called Arizona Metals. It's trading basically at its 52-week low, and it's at least 3 or 4 times, in my opinion, ahead of where it was last year. And those stories are all about. This is just one of many. So either one or two things is going to happen, Ron. Either we were part of the last ones, turn the light off, and somehow that industry is over, or it's the most compelling time. I kind of believe, and obviously why I stay in is because I believe it's the latter. So as tough as it is now, it may still remain tough for a few more weeks or months. It's too compelling not to be involved in it at this point.
Yeah, the sentiment for the junior miners and the explorers, I talked to a couple of the CEOs and I joke that the sentiment is literally on my basement floor, but the good news is, again, the silver lining is, I mean, can it get worse? I guess it could possibly, but there's a heck of a lot more runway to the upside for it to get better because the value propositions, I'm an old accountant, just the numbers and what you get, for each dollar that you put into most of these stocks, it's astounding. I mean, There's one company, and it's not a junior, it's a mid-size, but Fortuna Silver is a company that I follow closely. They have $2 billion in assets. They have 700 million in debt liabilities total. So they have $1.3 billion in net assets after you pay off all their debt. Their market cap is like 900 million. So, and they're making money, they're making profit. It's like the stocks are priced like these companies are all going to go away, and not, it's crazy.
It's a contrarian's delight.
Yeah.
And I always said I need 3 you should die Grandich emails from former junior resource stockholders. I've gotten 2 in the last 24 hours. So if that third one comes in, Ron, and maybe even you can send it to me, then I know it's an ultimate buy signal, because then there'll be 3 people who told me that they wished I died versus hearing me speak about junior resource stocks.
Yeah, right. Well, I know I have a lot of company when I say this, but I'm convinced if I sold all mine, that would be the day the market turns. So, we'll hang in there and see how it goes. Peter, you're associated with a financial planning company, CNA Financial Group. Is that correct?
Right. So I wear 2 hats at this point in my life to cover up more and more balding spots on my head. One is I'm part of a planning group based in Wall, New Jersey. And then secondly, my first love always is metals and mining and general markets, and I write a blog, but mostly I'm on Twitter now. Twitter has become a favorite because it's so instantaneous, it's easy to do, and I actually enjoy it despite the occasional "you should die" Grandich messages.
Well, hey, that means you have an opinion, right? I will put a link up at the end of this video to a video that Peter and I and Dave Suki did talking about that introducing people to the financial planning firm. And if people want to reach out to you, it's peter@petergrandich.com. Is that correct?
Yes. And Ron, I don't say this to everybody interviews me. It's an absolute pleasure. You're a man of integrity. No ego comes across. I truly wish I lived long enough to see that damn 2,500 come off that bear.
You're going to see it, Peter, and you never know. You may even be here. So, well,
It'd be an honor.
Well, it absolutely would. I'm honored that you've joined me. You are a high level name brand person within this sector, and one of the first who gave me a shot. So I want you to know I'm very thankful for that.
Well, praise be to God, and thank you for this opportunity to speak. And again, it's a different world now. It's hard to trust main media, and I think people like you that are doing this is really what people have to go to, because mainstream media, left and right, just can't be trusted anymore, in my opinion. Sad, but that's what the world has come to.
Yeah, well, we're lucky that technology has enabled this to occur. I mean, who would have thought 30 years ago, if someone had told me I'd be in my basement broadcasting to the world, I would have thought they were crazy. So we're fortunate.
Well, we understand your wife is happy sometimes you're in the basement, but
yeah. She occasionally unlocks the basement door for me. So thank you, Peter. I'll look forward to seeing you again. Have a great day.
God bless. Take care.